Welcome back, everybody. Today we're doing a deep dive into something super important for traders, but it's something most people kind of skip over.
And what's that?
Well, we're talking about mindset, the mental game of trading.
Ah, got it. Trading psychology. Yeah, that's huge.
Exactly. And to help us with this, we're going to be looking at a couple of chapters, chapters 6 and 7, actually, from this book by Mark Douglas.
Oh, yeah. Trading in the Zone.
That's the one. Trading in the Zone. It's classic.
Definitely a must-read for any trader who's serious about, taking their game to the next level.
Totally. And in these chapters, Douglas really gets into how, mastering your psychology can give you a real edge in the markets.
Right. And one of the things he talks about is how most traders, they kind of fall into this trap where their emotions end up dictating their actions in the market. They base their risk perception on their last few trades.
I see.
So if they've had a winning streak, they get all confident, maybe even reckless.
Yeah.
But then a couple of losses hit.
Uh-oh. And suddenly they're filled with fear and doubt.
So they're basically on this emotional roller coaster.
Exactly. And that kind of emotional roller coaster can totally cloud your judgment. Makes it hard to make those rational, clear-headed decisions.
Makes sense. So instead of sticking to their plan and making decisions based on, sound analysis,
right,
they're just reacting to every little market move.
Yeah. It's almost like driving a car while constantly staring in the rearview mirror. You're bound to crash.
Ooh, good analogy. I like that. So what's different about the traders who are consistently successful?
Well, what sets them apart is that they've learned to embrace what Douglas calls the uncertainty principle.
Okay, now you've got me curious. What is that?
Well, is it like in physics where you can't know everything for sure at the same time?
Maybe.
Well, it's related, but it's applied to trading. So basically, the uncertainty principle in trading is this idea that, anything can happen in the market.
Right.
You have to let go of this need to be right all the time to predict every little move.
Exactly.
Okay. So if I'm hearing you right, it's like acknowledging that the market is unpredictable by nature.
Yeah.
And being okay with the fact that you won't always be right.
Exactly.
But does that mean giving up on analysis altogether?
Oh, no, not at all.
Okay.
It's more about having a plan, but also, recognizing that the market can and will often do some unexpected things.
Of course, yeah.
So instead of getting caught up in what you think should happen, the real key is to, stay present, stay in the moment.
In the moment.
Be open to all those possibilities. Douglas calls this being in the now moment opportunity flow.
The now moment opportunity flow. I like it.
It's about constantly evaluating the situation, adapting as new information comes in.
Okay, so it's about being adaptable, not rigidly sticking to a plan that might not be relevant anymore.
Exactly.
Okay, that makes sense. But this all still sounds a bit, abstract.
Yeah.
So how can traders actually put this, uncertainty principle into practice?
Well, one way is to understand that, naturally, our minds filter information. We tend to focus on what confirms our existing beliefs.
Confirmation bias.
Exactly. And we ignore the stuff that, contradicts those beliefs.
Yeah.
And that can lead to missed opportunities, especially when, fear kicks in.
So we're blinded by our own biases.
Yeah, basically.
That's interesting. Does Douglas give any examples of how this, plays out in trading specifically?
He does. He uses this really cool illustration of a boy and his dog.
Okay.
It's all about how our perceptions shape our reality. The main takeaway is that we often miss crucial details because we're so focused on our own internal narratives.
That's fascinating. So how does this idea of our perceptions, limiting us, translate to the world of trading? I imagine it can have some serious consequences.
Absolutely. Think about it. You're in a trade, the market starts moving against you, fear sets in, right?
Yeah.
And you're desperately searching for anything that just confirms your initial bias.
You're hoping it will turn around.
Yeah. You might even ignore those clear warning signs.
Ugh, I think a lot of us have been there.
Right.
You're so convinced you're right that you miss what the market is actually telling you. So you're saying, our emotions can actually prevent us from seeing profitable opportunities.
Absolutely. It's like you're wearing blinders. You only see what you want to see.
That's a good way to put it.
And that's why it's so important to, expand your mental framework to be what Douglas calls making yourself available.
Making yourself available.
To the market's truth. even if it contradicts your initial assumptions.
So be open to being wrong.
Yeah. You have to see both the known, which is your trading edge,
Right.
and the unknown, which is, how each trade will actually play out.
Making yourself available. I like that. So it's about being receptive to the market's signals, not trying to force it to fit, like our own little story.
Yeah, exactly.
Does this tie into the idea of like the zone that Douglas talks about?
It absolutely does. Making yourself available, that's actually a key step towards achieving that state of being in the zone, where your mind is truly in sync with the market.
So like you're not just, reading charts and stuff,
Right.
but you're almost feeling the collective consciousness of all the other traders.
Exactly. It's a mental state where, it's almost like you can feel the energy of the market.
Whoa, that's a pretty wild concept. So we're not just battling our own emotions, but we're also trying to like tap into the collective energy of the market.
It might sound a little far out there.
Yeah.
But think about how like a flock of birds or a school of fish,
Right.
They change direction seemingly as one. There's like some sort of unseen connection there.
Yeah.
Douglas believes traders can tap into a similar collective consciousness in the market.
So we're all connected in some way.
Yeah.
And the market is like a reflection of that interconnectedness.
It's a fascinating idea.
It is. So how do we reach this zone?
Right.
Is it something we can like actively train ourselves to do?
There are definitely some mental disciplines involved, and we'll dive into those a little bit later. But first, it's super important to really grasp why embracing this anything can happen mindset is so crucial.
Okay. Yeah, I'm with you.
And to do that, we need to explore, the fundamental characteristic of the market, which is this inherent ability to do virtually anything at any time.
All right, I'm ready to go deeper. Let's do it.
So, what's really interesting? This whole idea that the market can do pretty much anything at any time.
Right.
It actually comes from us.
From us. What do you mean?
Well, it comes from the combined beliefs and actions of all the traders out there,
Oh, I see. So it's not some mysterious external force, but it's like the aggregate of all our individual decisions.
Exactly. It's like this giant tug of war.
Yeah.
Each trader's pulling the price in the direction, they think it's going to go, based on their own analysis and outlook.
Makes sense. That's why it can seem so chaotic sometimes.
Right. But remember, at the core of it all, every trader, we're all driven by the same basic goal.
Which is?
To make money.
Oh, yeah, of course.
We do that by buying low and selling high, or, vice versa.
Right, the basic principle. But with so many players involved, different strategies, risk tolerances, I can see how things can get pretty complex.
Oh, absolutely. But how does this all connect back to the idea that, anything can happen?
Yeah, that's what I was wondering.
Well, think about it. The market's basically made up of traders, their motivations, which, like we said, is to make money.
Right.
And then how their actions, impact the price movement. But here's the really interesting part.
Okay.
Price movement, it's not just about the current price. It's about what all those traders collectively believe about the future value of an asset.
Ooh, I see. So it's like a self-fulfilling prophecy.
Yeah.
If enough people believe the price is going up, their buying activity will push it higher.
Precisely. And the same goes for selling. If enough people think the price is going down, their selling will push it lower. So it's this collective psychology, this aggregated belief system.
Right.
That's really driving those market movements. That's why understanding individual trader psychology and how it contributes to that larger market picture is so important.
Makes you realize that every trade, no matter how big or small, it has the potential to influence the market.
Exactly. It might just be a tiny ripple,
Right, yeah.
But it's still part of that larger wave. Does Douglas give any examples that show this?
Yeah, I was wondering that. Are there any stories that illustrate this point?
He does. There's this great story about a really skilled technical analyst. This guy was convinced he had identified this solid support level in the soybean market.
Okay, so he thought the price would bounce back from that point.
Yeah, he was totally confident. And he was presenting this analysis to this seasoned chairman of the board, fully expecting, the price to bounce. And as they're talking, the market actually hits that exact support level.
Oh, wow. I bet he felt pretty smug. See, I told you so.
Right. But instead of, jumping in to buy at that level, the chairman, this guy with decades of experience in the trading pits, he calmly picks up the phone and tells his clerk, Sell 2 million bushels of soybeans at the market.
He just drops a massive sell order right at that support level.
Yeah.
That's bold.
It was. And guess what happened?
The price tanked.
Oh, yeah. Plummeted. Totally contradicting the analyst's prediction.
Yeah.
The chairman turns to him and says, you see, if I can do that, anyone can.
That's a powerful lesson in humility for sure. It shows that no matter how good your analysis is, you can't control the market. There are always those unforeseen events that can happen.
Exactly.
So how do we reconcile this with, having a trading plan?
It's not about abandoning analysis or planning. It's about understanding that even the best analysis can be wrong. And unforeseen stuff, it happens.
Right.
So that's where embracing uncertainty comes in. You can't just eliminate those unknown variables.
Yeah.
You have to factor them in.
So it's a balance, like having a solid plan,
Right.
but also being flexible, being able to adapt.
Exactly. And does that remind you of anything?
Is this where thinking in probabilities comes in?
You got it. The most successful traders, they don't try to ignore those hidden variables.
Okay.
They acknowledge them. They understand that no one can predict the future with absolute certainty. So instead, they focus on assessing the likelihood of different outcomes. They think in probabilities.
That makes sense. But I think a lot of people struggle with that, with shifting their mindset from trying to be right all the time to this idea of probabilities.
That's a tough one.
What does that actually look like for a trader?
Well, it's about moving away from trying to predict exactly what's going to happen.
Okay.
And focusing more on the probability of certain outcomes. So for example, instead of saying this stock's going up tomorrow, you might say, okay, based on my analysis, there's like a 60% probability this stock will go up tomorrow.
It's subtle, but I see the difference. It's like acknowledging that you could be wrong.
Exactly. You're prepared for that possibility, like in poker,
Yeah.
You can't know for sure what cards your opponent has.
Right.
But you can calculate those odds and make decisions based on the probabilities.
Good analogy. So
Yeah.
Are you saying like casinos have embraced randomness and built a system that actually profits from it?
Yeah. It's an interesting thought. Right.
Yeah. And traders, we're still trying to fight against that inherent uncertainty in the market.
That's the paradox Douglas points out. And that leads him into Chapter 7, The Trader's Edge. Thinking and probabilities.
Okay.
He argues that if casinos can win consistently from pure chance, traders can certainly do the same in a market that has, at least some degree of predictability.
So that's pretty amazing if you think about it. Casinos are winning consistently from pure chance, but we should be able to do even better in a market that, like you said, has at least some degree of predictability, right?
Right.
So how do we actually tap into that trader's edge that Douglas is talking about in Chapter 7?
Well, it all starts with having like a solid trading methodology, something you trust, something that's been proven to work.
So it's not just about like blindly accepting that anything can happen. We still need some structure, right? A battle plan.
Oh, yeah, for sure. But it's also about understanding that even with the best system in the world, you're not going to win every trade. Losses are going to happen. It's part of the game.
Yeah, of course.
But thinking in probabilities means you actually plan for those losses. You accept them as part of the process.
So it's not about like avoiding losses altogether, but it's about managing them effectively.
Exactly. You know beforehand how much you're willing to risk on each trade. You have your exit points already figured out before you even enter the trade.
Okay, that makes sense.
That way you're not making emotional decisions when things start going against you.
Yeah. It's like you're taking the emotion out of it. You're not getting caught up in the heat of the moment.
Exactly. It's about staying disciplined and protecting your capital so that you can stay in the game for the long haul.
I think that's where a lot of traders, myself included, we kind of get tripped up. Emotions, they can be our own worst enemy.
Yeah,
Right.
they really can.
It sounds like Douglas is really advocating for like a deep level of self-awareness and mental discipline.
He is. He talks about the importance of staying focused, being present in the moment. Remember that now moment opportunity flow?
Yeah.
And learning to trust your intuition, not being afraid to be wrong, those are all skills you got to develop.
So it's not just about having a great trading system, but also having the mental toughness to actually stick to it no matter what's going on in the market.
You hit the nail on the head. It's about building that psychological resilience, being able to handle those ups and downs, mastering your emotions, not letting them master you.
I think that's a great takeaway for our listeners today. This has been like a truly eye-opening deep dive.
Yeah.
It's definitely shifted my perspective on trading.
I'm glad to hear it.
If we had to like sum it all up, what would be the key takeaways for our listeners?
Okay, well, I think it comes down to a few key points. First, Embrace the uncertainty. The market is unpredictable, and that's okay. Second, think in probabilities. Don't try to predict the future. Assess the likelihood of different outcomes. Third, you got to have a solid trading methodology, something you've tested and you trust. And last but not least, develop the mental discipline to stick to your plan no matter what happens. Those are the foundations of consistent success in trading.
Absolutely. And I think, like, the most important lesson of all is that in the market, anything can happen. And once you really get that, really internalize it, you can start to trade with so much more clarity and confidence.
Yeah, it's almost like a weight lifted off your shoulders. You can let go of that need to be right all the time.
Totally. Well, this has been a fantastic deep dive into trading in the zone. But as we wrap things up here,
I want to leave our listeners with something to think about. Knowing that anything can happen in the market, how might you approach trading differently? What mental shifts do you need to make to take your trading to the next level? Think about it. Until next time, happy trading, everybody.